All right, so we get a pretty hefty report this time around looking at the whole economic landscape.
Yep.
And I got to say, some of the findings are really eye-opening in terms of what's happening with consumers and different sectors of the economy.
Yeah, for sure. It's June 2024 GBD Central Bankers Chef Douve.
Yeah.
Inflation, recession.pdf, right?
Yeah.
It pulls together a lot of data and different viewpoints that kind of paints this.
It paints this fascinating but kind of unsettling picture.
Yeah.
And what really struck me, I think, right off the bat was this tension between like rising inflation, really squeezing people's budgets, and then other parts of the economy, corporate profits, some areas of finance, they seem to be doing okay.
Yeah. That's a core tension that kind of runs through this whole report.
Absolutely. And the report uses this really interesting mix of sources too, right? Like you've got Bloomberg columns in there. You've got Michael Snyder's Substack analysis, earnings calls from McDonald's, Applebee's, Chipotle, economic data like consumer sentiment surveys from the University of Michigan and the Conference Board, of a lot of charts and analysis. So our goal today is to really dig into this and try to understand what are the key forces at play here, and what does it all mean for the average person who's trying to make sense of this.
All right, well, let's start with what the report calls out as kind of this big area of struggle, and that's really the pressure on consumers, to the point where some are calling it a restaurant apocalypse.
Oh, wow. A restaurant apocalypse.
Yeah, and the Bloomberg article that they cite in the report really kind of sets the scene right. It talks about how fast casual dining is getting hit hard with rising housing costs, inflation continuing to, take a bigger and bigger bite out of people's disposable income.
Yet it's not just a feeling either, right? There are some pretty serious examples cited in the report, like Red Lobster considering bankruptcy.
Yeah.
TGI Fridays also struggling.
Yeah, and Moody's ratings, they point out that, a lot of fast casual restaurants, they rely heavily on lower income households.
Right.
And so that segment of the population is really feeling the squeeze the most.
Makes sense.
And the Bloomberg article actually gives some pretty specific examples. You've got Sticky's Finger Joint, which ended up filing for bankruptcy. They specifically cited the unprecedented rise in chicken and potato prices as a major factor. Yeah. And then you've got Tijuana Flats, Rubio's Coastal Grill, also closing locations.
Wow.
So this really underscores, this trend of consumers either trading down to, cheaper options or just simply eating at home more.
Yeah, I can definitely see that.
The report quotes Dennis Cantalupo and Mark Levin talking about how you can often stretch your grocery budget a lot further than when you're, going out for prepared meals.
That makes total sense.
And once people establish that habit of eating at home to save money, it can be hard to get them back into those restaurants.
Right, even if things stabilize a bit.
Yeah. And that's where Michael Snyder's idea of a restaurant apocalypse comes in, right?
Interesting.
He connects, how busy restaurants are to the overall health of the economy.
Oh, okay.
So, when things are good, parking lots are full. When things are bad, you start to see those closures.
Makes sense.
And he points to a pretty significant drop, around 5% in sit-down restaurant visits in 2023 compared to the year before.
Wow, so this is not just a recent thing.
No, it's been building for a while.
Okay.
And the report mentions that even in a major food city like New York Eater NY, reported over 40 bar and restaurant closures.
Wow.
Just in the first couple of months of this year, with owners citing struggles to recover after the pandemic, and all these other factors.
So it's a real perfect storm of challenges, it sounds like.
Absolutely. And we're seeing larger chains making these tough decisions, too. Applebee's, after already closing some locations, they're planning to shut down even more this year.
Oh, wow.
Tony Moreleo, he's from Applebee's, he described these as incredibly difficult decisions, really a last resort.
Yeah, I imagine.
And then you've got the situation with Boston Market, which has gone from, almost 1,000 locations to potentially facing collapse. And they're actually denying bankruptcy right now.
Oh, really?
Yeah, which is adding to their problems.
Wow. So it's not even a clear path.
Yeah.
Even if they are able to, restructure.
Exactly. And, all these individual stories, they really kind of converge on this central point, which is that inflation is a real problem, right?
Yeah.
And people simply have less money to spend.
Right after they pay for those essentials.
Absolutely. And it's not just consumers feeling the pinch. Restaurants themselves are dealing with these skyrocketing costs. Jessica Dunker from the Iowa Restaurant Association, she highlights a 30% increase in the cost of goods for restaurants.
Wow, 30%.
Yeah, on top of, the pressure of rising wages.
So they're getting squeezed from both sides.
Exactly. And the report actually gives some really specific examples of increasing food costs that are affecting everyone, not just restaurants, but, your own grocery bill, too.
Okay, like what?
We'll take orange juice, for instance. The report flags this potential for a dramatic price increase in orange juice.
Oh, no.
Yeah, due to a really poor harvest in Brazil, Fundicitrus data shows a huge drop in production and orange juice futures. They've already hit record highs.
Oh, wow. So that's going to ripple through a lot of different products.
Absolutely. It's not just orange juice either. The report notes that, other food prices like grains are also starting to creep up. And, cocoa and coffee prices, while they have come down a bit from their peaks, they're still significantly higher than they were a year ago.
Wow. So there's this broad increase in ingredient costs.
Yeah, it's really putting a squeeze on those businesses.
And going back to those restaurant closures you mentioned earlier, the report highlights those steep increases in potato and chicken prices. Specifically, the tradingveeconomics.com data for Brazil really shows how much pressure some businesses are facing.
Absolutely. It's a tough situation, and it makes you wonder how some of them are even managing.
Which brings us to McDonald's, right, and their temporary $5 meal deal.
Oh, yeah.
Which seems like, they're trying to win back some of those price-sensitive customers.
Yeah, it's a McChicken or a McDouble, 4-piece McNuggets, fries, and a drink.
For $5?
For $5, yeah, but it's a limited time offer.
Oh, so it's not going to last?
No, the report mentions that it's expected to last about a month.
Okay.
And the analysis there is that, unless this becomes a permanent thing, it's probably not going to make a huge difference in the long run. Because consumers are really feeling the financial strain.
Right. And that leads us perfectly into, this idea of declining consumer sentiment, which is really, it's not just about spending less. It's about how people are feeling about the economy, both now and in the future.
Exactly. And the University of Michigan survey showed this really significant drop in consumer sentiment actually hit a 6-month low.
Wow.
And what's notable is that this 13% decrease is attributed to a reacceleration of price increases and people's expectations that prices are going to continue to rise.
Oh, so it's not even just the current situation, it's the outlook.
Exactly. It's the outlook. And this isn't just one survey either. The report also mentions the Conference Board's Consumer Confidence Index, which you can actually see in Figure 7, shows a similar trend.
So we're seeing this, really consistent decline.
Yeah, absolutely.
Okay, so we've got these very real challenges for consumers and, certain sectors like restaurants are really feeling it. But the report also makes it clear that the U.S. economy as a whole is kind of showing this uneven performance, right?
Yes, it's not this uniform picture of decline.
Right. It's a lot more complex than that. And that's where it gets really interesting.
Absolutely.
We see these contrasts between companies like Starbucks, which announced a 2% fall in revenue.
Oh, wow.
Their biggest drop outside of the 2008-09 financial crisis and the 2020 pandemic, as Charlie Bolello pointed out.
Right.
And then you've got Cracker Barrel forecasting lower profits and sales.
Yeah.
They're seeing fewer diners. They've even slashed their dividends. Their stock price is near a 52-week low.
Yeah.
And it's not just food and beverage, right? Home Depot also saw a 2% revenue decline, marking their 5th straight quarter of negative year-over-year growth.
Oh.
And according to Bolello, that's their longest streak since the 2009-10 recession.
So that suggests a pretty broad softening in consumer spending, even on those, bigger ticket home improvement items.
Right. And yet, on the other hand, you've got companies like Chipotle, who seem to be doing incredibly well.
Mm.
Their performance is described as astonishingly well in the report, and their stock price even jumped.
Yeah, it really highlights how fractured this economic landscape is.
Absolutely. And this leads to the argument that despite, these pockets of strength, the majority of U.S. households might actually be experiencing a real economic contraction.
Oh, wow.
When you factor in inflation, right? Their buying power just isn't keeping pace.
Right.
And that sets the stage for this really crucial point that the report makes, which is about corporate profits amidst all of this inflation.
Yeah.
The argument is that the current, expansionary monetary conditions, where the central banks are increasing the money supply, often by lowering interest rates or buying bonds,
right,
along with, large government spending, and these social transfer payments are creating this environment where corporations can actually increase their prices by more than their costs are rising.
Oh, so they're actually increasing their profit margin.
Exactly. And it's leading to these record corporate profits that we're seeing illustrated in Figure 13.
Wow.
And the report points to McDonald's, again, as a really interesting example.
Mm.
They say that their prices have more than doubled since 2014,
Wow.
which is significantly higher than the official inflation rate.
So they're really taking advantage of the situation.
It seems that way. And the report also looks at the impact of specific regulations like California's increase in the minimum wage for fast food workers to $20 an hour.
Oh, yeah.
And they use Chipotle as an example. They reported a 20% increase in wages in California because of this new law.
Right.
And they raised their menu prices in the state by 6 to 7%.
Oh, okay. To offset that cost.
Right. And the market's reaction to Chipotle's announcement was actually really interesting. Their stock price went up, which the report interprets as a clear sign that monetary conditions are still very expansionary and inflationary.
Oh, wow. So investors are expecting that these price increases will just be absorbed by consumers without a major drop in demand.
Exactly. And it all ties into this concept of monetary illusion
Okay.
and how it can lead to these really distorted signals in the economy.
Yeah.
The report emphasizes that when the money supply increases significantly, inflation doesn't hit all parts of the economy at the same time or with the same intensity.
Right. So it's not uniform across the board.
Exactly. And it's kind of like, you might see your paycheck go up, but if the prices of everything you need are rising even faster, you're not actually better off.
Right. It's a false sense of well-being.
Exactly. It's this illusion.
Yeah.
And the increases that we're seeing in the prices of various assets, things like cocoa, coffee, even stocks like 3M and Walmart, industrial metals like copper. This might not necessarily be a sign of real strong economic growth.
Okay.
It could be reflecting this excess of money in the system that's just pushing up prices across the board.
Interesting.
And the Primerica survey mentioned in the report really highlights, how this is impacting people. They found that a significant 67% of middle-class respondents felt like their income wasn't keeping up with the cost of living.
Wow.
And they were cutting back on non-essential spending, like eating out.
Which goes back to, those struggles in the restaurant industry.
Exactly. It all ties together.
Yeah.
And then the report points to this really interesting divergence with the Demeadville International Economic Barometer, which has historically been this pretty reliable leading indicator for stock market trends.
Okay.
But it's currently showing a downward trend, even as stock prices have been going up.
Oh, wow.
So it's this disconnect, and it's supported by the Conference Board's leading economic indicator, which is also decreasing.
So that suggests that the underlying economy might be weakening despite the gains in the stock market.
Exactly. And it makes you wonder, what do those rising asset prices actually mean?
Right. Are they really a sign of a healthy growing economy, or are they more a symptom of all this extra money sloshing around?
Right, which could potentially lead to more inflation down the road.
Exactly. That's the concern.
And then the report takes this fascinating kind of turn into historical perspectives on monetary systems.
Oh, okay.
And they include this really interesting collection of quotes right at the beginning.
Like what kind of quotes?
Well, you've got William Cobbett talking about how the creation of the Bank of England essentially mortgaged the country.
Wow.
And then there's Alan Greenspan warning about abandoning the gold standard and how it can lead to the confiscation of savings through inflation.
Oh, interesting.
And then you've got Salmon P. Chase, who was Lincoln's Treasury Secretary. He famously called the National Bank Act the biggest mistake of his life.
Really?
Yeah, because he felt like it led to this monopoly of banks.
Wow.
And then there's this Bismarck quote about, foreign bankers controlling America's riches after Lincoln's death.
Oh, wow. That's thought-provoking.
Yeah, and then you've got Lincoln himself saying that he viewed financial institutions as a greater threat than the Southern Army.
Wow.
It's pretty powerful stuff.
Yeah.
And then you've got Tolstoy equating money to a new form of impersonal slavery.
Okay.
And Palatio Webster warning about paper money corrupting laws and destroying fortunes.
So these are all pretty negative views of, financial systems and money.
Yeah. And then there's John Adams saying that a lack of understanding of, coin credit circulation that causes distress.
Okay.
And Andrew Jackson believed that Congress should issue paper money for its own use, not delegate that power.
Interesting.
And then Ludwig von Mises offers this really blunt assessment that governments essentially turn useful paper into something worthless.
Wow. So it's quite a range of historical perspectives.
Yeah, and it's striking to see these age-old concerns about monetary policy and its potential consequences still echoing in today's discussions about inflation and economic stability.
Right, because those concerns are still relevant today.
Absolutely. And these historical voices, they really give you this broader context for understanding, the potential pitfalls of different monetary systems
Yeah.
and these recurring anxieties surrounding inflation and the influence of financial institutions.
Makes sense.
And then the report shifts gears a bit and talks about some investment observations.
Okay, what do they have to say?
Well, they note a positive outlook for financial stocks in a few different regions, including the U.S., Europe, and some emerging markets.
Oh, interesting. Like which ones?
Well, they specifically mentioned Bank of Cyprus and Turkey Garanti Bankası.
Okay.
And they also highlight strength in Hong Kong and Chinese financials like Hang Seng Bank and Ping An Insurance.
Interesting.
And they view this as a positive sign for the overall market in that region.
Okay.
They also mention European financials and some news around Berkshire Hathaway and Chubb.
Okay, so those are all areas that they see as potentially positive.
Exactly. And interestingly, they maintain this long-term positive view on Hong Kong and China.
Oh, wow, even with all the, geopolitical tensions.
Yeah. And they even suggest that there might be opportunities in undervalued sanctioned companies and property companies.
Wow, that's a contrarian view.
It is. And despite a negative economic outlook for Thailand, they point to a recent rebound in some Thai stocks,
Oh, really? Like which ones?
like Bangkok Bank, Siam Cement, Thai Beverage, things like that. And they suggest that there might be opportunities there even in a weaker market.
Interesting.
And then, of course, there's the consistent long-term recommendation for a 25% allocation to gold.
Yeah, they've been advocating for that for a long time.
Almost 40 years.
Wow.
And they point out this really interesting situation where the price of gold is rallying, but ETF holdings of gold have actually decreased.
Oh, so investors might be missing out.
That's what they're suggesting, yeah, that many investors might still be underinvested in precious metals.
Interesting.
And they also mentioned increased positions in gold and silver mining companies, as well as platinum.
Okay.
And they anticipate potential outperformance from silver and platinum.
And what's driving that?
Well, they highlight the potential supply shortage in platinum and its long-term price base as being particularly compelling.
Okay, so they see a lot of potential upside there.
Yeah. And finally, the report wraps up with some really thought-provoking quotes from economists.
Okay, like who?
Well, there's Claude Frederick Bastiat, who observed that plunder can become a way of life and that a legal system can be created to authorize it.
Wow, that's pretty cynical.
It is, but it definitely makes you think, when you consider some aspects of our current financial system.
Right.
And then there's Henry Hazlitt, who connects inflation and the growth of socialism, noting how they can kind of reinforce each other.
Oh, interesting.
And that really echoes Greenspan's earlier warning about inflation as a form of confiscation.
So it's this idea that, inflation can erode individual liberty.
Exactly. And these final thoughts really leave you with some important things to consider.
So to sum it all up for, the listener, rising consumer prices are having this huge impact on spending, especially in the restaurant industry, leading to closures and, real financial difficulties for a lot of businesses.
Yeah.
And while there are some bright spots in the broader economy, underlying consumer sentiment is weak. And, those historical perspectives remind us of the potential long-term consequences of different monetary policies and inflation.
It's a complex picture.
Absolutely. And it's important to remember how uneven this current economic landscape is.
Yeah, some sectors are thriving, others are struggling.
Right. And that complexity can make it difficult to get a clear picture.
For sure.
But hopefully our discussion has, helped shed some light on those key forces at play.
I think so. And it really leaves you with this question, as you reflect on all of this and those historical perspectives alongside the current economic data. What do you think the longer-term implications might be for your own financial well-being?
Yeah.
And for the overall structure of the economy?
Yeah.
What actions might you consider taking in response to these trends?
It's a complicated situation with no easy answers.
For sure. But we encourage everyone to continue exploring these themes and to think about how the information we've shared today connects with their own observations and experiences.
Yeah, it's always more to learn and consider as we navigate these, interesting times.
Absolutely. All right, well, that's all the time we have for today's deep dive. But as always, we encourage you to keep digging and stay curious.
Thanks for having me.
Thanks for joining us.